our way.
Hey, Paul.
Yeah, Chris?
I had a thought.
What was it?
We should have a progressive lifetime income tax instead of a progressive yearly income tax. Some nice, light thought for your morning jog.
Well, okay, so I want you to walk me through just cursorily what that means.
Sure.
Just for the audience, because I know exactly what you meant.
Oh, of course. Yeah, no.
But the audience might have some questions.
So right now we have a progressive income tax in America where there are tax brackets and you are taxed at the marginal. Each dollar you make is taxed at that marginal rate. So I'm going to simplify the brackets in the example, but let's say for the first $10,000 you make, you get taxed at 10%. For dollars you make 10,001 through 50,000, you get taxed at 20%. And then the dollars you get taxed at from 50,001 to 100,000 or higher, right? In this example, would be 30%. And so that's a progressive tax rate where it's each additional dollar past that level gets taxed at the higher rate. It does not impact the previous dollars made.
So your total amount of income is subdivided into pieces and certain parts of those pieces get taxed at different rates based on how much they are.
Yeah, it's a really good way to think about it. And so like AOC's 70% marginal tax rate over, I think it was $1 million or whatever it was. That doesn't mean that if you make over $1 million, all of your money is taxed at 70%. It means for every dollar starting at 1,000,001 and above, you get taxed at 70%. And so when people were saying, like, you could tell a fifth grader where if you make $10 at the lemonade stand and then I come and take away $7, that's not nice. The real response is when your lemonade stand makes $107, the last $7, the 100. So if you're, sorry, I get so worked up about this, I can't even speak. If you make $1,010,010, then the last $10 would be taxed at 70%. So you'd be paying not 70% tax on the first million. And I think if your lemonade stand is making $1,010,000, you're going to be okay. I think any fifth grader would believe that. So there's a lot of other income taxes and taxes in America, but that's kind of the one everyone talks about. And it's a yearly tax. So based on the amount of money you made in the last 365 days, you have to pay taxes on a marginal rate for each of those tax brackets up until, I think the top marginal rate now for single people is like $250,000. I might be off by a little bit, and maybe $500,000 for married couples. And the top marginal rate right now is like 32-ish%. I'm ballparking. I don't have it in front of me, which means that, right. So like if you're making $1 million as a single person, you're paying less than 32% tax on the first $250,000, and then you're paying 32% tax on everything from $250,001 to $1 million.
But you don't like this. You don't like the progressive tax.
So I like progressive taxes. I don't think it should be based on yearly income. I think it should be based on your lifetime income. And so what happens now is if you make a lot of money when you're young, you get taxed at that higher. So let's say I make $250,000, as a 23-year-old, I get taxed at the same rate as a 50-year-old that's getting maybe $250,000 last year. But $250,000 to a 23-year-old is worth a hell of a lot more than $250,000 to a 50-year-old because of the time value of money. So if I'm 23, I can expect to live about 30 years longer than that old guy that made $250,000. And so if I can have that money when I'm younger, I can invest it and save it. And it's worth more to me if I can beat inflation than it is to that 50-year-old because I can let it grow over a longer time period. And so having a lifetime income tax means that, okay, every year I think you get the first $15,000, something like that, tax-free every year. And so instead of making that per year, let's assume everyone works from the age of 18 to 65. So that's let's say roughly 50 years. And then instead of being $15,000 each year, you just get the first $750,000 you make in your lifetime tax-free. And then you hit your first income tax bracket. So then I think the next bracket's like 15%, and it goes from, let's say, $15,000 a year to $20,000 a year. So then when you compress that, you stretch it over the course of your lifetime, and so that's your $750,001 to your, let's say it's $1 million. So that next $250,000 is taxed at 15%, and then so on and so forth down our current tax brackets. And so that's kind of how you can envision the new
so
going.
People who are inherently cheap, right? They're
like
out
me,
there,
like me,
right? Like, yeah, exactly like you. The people who reuse hot dog buns.
You just don't buy the hot dog bun in the first place. That's the cheapest way to go.
That's true. That's true. They could theoretically get pretty far into their lives without ever paying any taxes. If let's say for a moment that $250,000 is the first, or $250,001 is the first dollar you'll ever be taxed on.
Mm-hmm.
You could make it pretty far in your life before you pay taxes. And so how do you mitigate the fact that there's going to be this weird dip in taxes? If let's say magically you become dictator and implement this, how do you account for that?
So you can account for it based on the money you've already made in your career. So, right, if I've already made like $1 million in the first 10 years of my career or something like that, just picking around numbers, then I would be at whatever that tax bracket is now. And so it would hopefully increase taxes on people further into their careers relative to people earlier in their careers at the initial shift.
So how does that work? Because you will, that number, your total cumulative amount of money you've ever made in your entire life will just keep growing, and more likely it will exponentially grow as you become promoted, as you invest more, that sort of stuff. So the brackets have to shift according to your age, I would assume.
So not according to age, just according to your amount made. So the big thing is that people don't conceptualize how much more money rich people make than even your median income family. So like using like our current tax brackets as the example, I think just doing the math, it really is like the first $750,000 you make in your lifetime wouldn't be taxed. Because right now you get $15,000 tax-free every year for 50 years. And so it just compresses it into the first $250,000. And so the median household income, so not even person, the median household income in America is about $55,000. And so it would take even them to hit that first bit is like 15 years of working. And so you get that tax break over the course of your career. It's just now we're lining it up front.
Just so I understand. So once you hit $1 million using today's tax brackets, you will be paying whatever the percentage is.
Yeah, like 20% or something.
On your income forever now. So
yes,
you theoretically will be making less money over the course of your lifetime because you'll be paying it into taxes.
No, you should be making the same amount. No, it should be the same because you're changing the timing in which you pay it, not the amount in which you're paying. You get $15,000 a year tax-free. And I'm just saying, instead of doing that per year for 50 years, do the first 15 years. And then you're 16 or something, you start getting the next level. Because that's essentially what we give people. We give people that current tax scheme. I have not done the math. I probably should have done the math. But I think if you look at your career earnings, I'd imagine it doesn't shift the tax burden all that much. But if it does shift the tax burden, ideally in my mind, it shifts it onto people that make a lot of money. The big thing is like if you're making $250,000 a year, which is like a doctor, basically, you're making in 1 year what the median household in America makes every 5 years. And then if you're making $1 million a year, that's what the median household makes in America every 20 years.
I'm having trouble wrapping my brain around the math. Okay. If I get to 30 and I've hit my $1 million mark,
yep.
From 30 until the day I die, any money that I make will be taxed at the highest tax bracket. Versus under the current system, that gets subdivided, and so I would be paying many fewer taxes. So,
no, you wouldn't be at the highest bracket. You'd be at the next bracket. So right now, I pulled up the tax rates. So with the current ridiculous tax bill, so if you're single, and I'll round to make it math easier. If you're single, you get the first $10,000 a year tax free. Oh wait, you have to pay taxes on the first 10,000. Oh, you pay 10,000. You pay 10% on the first 10,000. Okay, so your tax rate off the bat is 10%. And so for the first $500,000 you make in your career, you pay 10%. And then next $30,000 a year you get 12%. So that means for the next $1.5 million you make, you get taxed at 12%.
Under this plan, rich people will certainly be paying way more taxes.
Hopefully.
So is that the problem that you're fixing? I mean, I guess that's my next question is what problem are we fixing by doing this shift?
So the big one is there's a couple. One, ideally, I can like keep doing the math as we're talking. Ideally, rich people get taxed more. People that make an astronomical shit ton of money, you and I cannot comprehend how many zeros go into like even 10 million. It's like almost incomprehensible. My brother has friends that have donated $8 million to Yale as a gift. And if I make $8 million in my lifetime, I will be happy. And like I'll actually be super wealthy. That would be like $150,000 a year for a 50-year career, a little bit more. And they just gave it away. They're like, I don't care about this money at all. I'm going to give it to a college. Right. And so they have so much money that they gave away more than I'm going to earn in my lifetime as like a very successful business, if I am a successful business person. So I want to tax them at a much higher rate. I don't know if this actually does that, but ideally that would be part of it. So that's number one. Number two, it ideally gives more young people more money. So again, the idea being that young people, the value of current dollars is worth more to them because they have the ability to invest it over a longer time horizon. Part of it might be mandated savings in some regards, potentially. I mean, I don't know, but like you want to you have to advocate for that kind of mindset amongst young people.
Well, that's an interesting idea because I'm going to generalize again. Most people, when they get their refund check, usually go out and spend it. Correct. I would say.
Yep.
So the idea that people would all of a sudden start saving this money that they were, in a sense, getting back from the government until they turn until they start making a certain amount of money, I think is a fairly tall order because, money is a very powerful thing in terms of, especially when you're a young person. So I do wonder, how would you mandate any kind of investment, or would the government be doing it for you? Would you opt into it? Could you opt out of it? And if you're investing, the salary clock or the money clock that's ticking down speeds up when you invest because you're essentially making more passive income. So if you invest it, you're essentially speeding up this higher tax bracket that's careening toward you.
So careening is not a good word. So most people,
I think it's a great word, Chris.
Well, it's
just because you don't know what it means doesn't mean it's a bad word.
You can't be talking about basketball players when we're trying to talk about taxes. Please. It's because the issue is the careening is the wrong word because it's so much money that you're not going to hit it. That's the big thing. So the 32% bracket goes until you make $200,000 a year. So over the course of a lifetime, that's $10 million. So your first $10 million, you're not even at the top tax bracket yet. And so you're not careening towards anything. The median family income in America is $50,000, which means that you'll never get above the 20% tax rate in this plan. You're not going to come anywhere near the top brackets. And that's the median. So the median person. So 50% of Americans never have to worry about the top brackets. So then I think it's an easier sell to increase the bigger brackets because now we're talking in millions. So 0 to 500 is one bracket, 500 to 1.5 million is another, 1.5 million to 3.5 million is the next. And the last bracket anybody would really have to worry about would go from 3.5 million to about 7.5 million. So the vast majority of people would never get past the 7.5 million lifetime earnings.
I agree that people who make a shit ton of money probably don't necessarily need all of that money and perhaps need to be taxed at a higher rate. I don't think that we need to take most of their money. I disagree with that notion only because it might disincentivize actually making money. And I don't agree with that because I think that goes against the human condition in a way. I think that people who want to make a lot of money should be able to make a lot of money.
So I'm not saying this has nothing to do with that. And so you hit the highest bracket in this math at $25 million is when you finally hit the $25 million in lifetime earnings nets you to the highest bracket.
Yeah.
And then you're only taxed at 37% in this version. So I would probably add another one that's like at 50 million, you get taxed at 50%. Okay, two things. So I'm not advocating that we take away everyone's money. So even marginal tax rates as they are now on the super wealthy people, when they make a preposterous amount of money, do not take enough. So if I'm making $20 million and I take away half, you still have $10 million. And $10 million is more than the normal person makes in 400 years. So you are plenty rich at $10 million in 1 year. Then,
right.
So there's some leeway here, right? That's why AOC's margin of 70% over, I think it was 10 million, which is like taxing Alex Rodriguez and stuff on the marginal income over 10 million. So from like 10 million in one to 20 million, if they make 10 million more, they're still getting 3 million. And so you're making rich people just a little bit less really fucking rich. This isn't the doctor. Right. This isn't anyone that you know. Well, maybe you know them, but I don't.
Right.
I only know them through you. Or my brother.
Well, I do think that the more money that you make, the less sweat equity that has gone into that money, because a lot of it becomes passive.
Correct.
A lot of it, because like your first $1 million, you spent a shit ton of time working for that money, but the $100 million after that, probably not. I mean, if you think about Tim Cook, who makes hundreds of millions of dollars a year in however they manage it, or however they want to do, like bonuses, whatever. That there's no sweat equity in that, right? I mean, he has a very stressful job. He has a very important job, but does that mean that he deserves hundreds of millions of dollars a year? I don't know.
In all honesty, I don't think this disincentivizes him to work at all. So if it does, I'm actually okay with that. Tim Cook can afford to retire. We'll be okay if someone else goes and runs Apple for us. But I don't think he would retire if you started taxing him at 90% of his income, 99% of his income, right? There's so much prestige and probably joy he gets out of being the CEO of the biggest company in the world that you're not going to stop him from working. I mean, for example, even my co-founder at Zippia made at least $10-12 million on his exit from Movoto. And he works more hours than I do every week. Like, he's got no reason to be working besides the fact that he loves working. And again, $10 million is a preposterous amount of money. It's an obscene. So you can live on the interest. The interest on that would be $400,000 a year. You could live on forever without having to do any work again. $400,000 again is 8 times what a family earns in America every year at the median. And he's just getting it for free. And he's still working.
To go along with that thought, though, is that he seems to separate the idea of value to work, because he would never have walked away with just $500,000 from Movoto, right? Because even though he loves to work and he knew that he would never stop working, that doesn't mean that even though $500,000 is still a lot of money, objectively a lot of money, you can do a lot with that, he would still fight to get as much money as possible, because that's the perceived value of whatever he was walking away, or whatever he was selling, whatever he was trading for that money.
Correct.
So that's what you're going to combat the most with this kind of thinking, is that, yes, it is prestigious to work for Apple as the CEO for various different reasons, but you still are not going to walk away from the perceived value of that work. So even though he probably would do it for free because of the various things that might mean for him in his career and his personal life, but he's never going to do that because there is a value to that that you'd be walking away from. And so there's this idea that the allocation of money is almost separate from the work that you do for it.
So that's arguing my point, though, then, that like people would still do work. It's just and you're not taxing 100%, even though I think you probably could get pretty close to that at some income levels. But you're still making marginal dollars. So right, even if you're taxing somebody at 90% of everything from 100 million to $1 billion, they're still getting. So for, again, $100 million is an obscene, ridiculous, preposterous level of wealth that you and I cannot comprehend. You can't even the pile of money that is $100 million is incomprehensible. And so even if like you're going from 100 million to 100, like you just don't need more. You don't need the word need, like you don't need it. And so anyone that's working at that level is just doing it for fun because they don't need any money.
I mean, even that number, just 100 million of anything. Can you picture 100 million, what that looks like? I don't think our brains are meant for that. So the idea that people have that many zeros in their bank account is, I mean, you're right. It's totally unfathomable. It's totally an abstract exercise to have that much money.
I don't think it disincentivizes work, because people at that level are only working because they want to. Not if anyone's doing work once they become a 10 millionaire, it's because they want to. It's not because of the marginal tax rates, because you can stop working and live in San Francisco at $400,000 a year. Like you get $10 million, right? The rule of thumb is in retirement, you can live on 4% indefinitely. So at $400,000 a year, you can be perfectly happy in San Francisco. So anyone that's working after they've made $10 million in their bank account post-tax is just doing it for fun. Like there's no reason to be working. And so I don't think you're stopping anybody from working.
In terms of human nature, I think humans have this weird security baggage for some reason. Like all humans want to allocate more resources, even if they have enough resources. And so I think that it's not just that people want to work. Even though they have all this money, there's this weird cognitive dissonance inside their head that, well, you can't tell me that I've made enough money for the rest of my life. I need to go work more, because what if this terrible, catastrophic event happens where I no longer have any money. Well, I need to go earn more. So I don't really like the idea of somebody telling me that I've made enough money. I don't really know how to parse that because I don't have $100 million or even $10 million sitting anywhere that I could,
Yeah. I mean, I'm in favor of some pretty high marginal tax rate towards the end, but it would still never be 100. I mean, maybe it would, but you can keep working. Like no one's going to stop you from working in this scenario.
You're just going to be giving it, or you're going to owe more of it to the government.
So that's the last part of this thought, is that I'd imagine it's easier to get people to agree to higher tax rates if they have it framed like this, because right, I was saying the first 10% is the first $500,000, but the top marginal tax rate then is all the money you earn in your lifetime over $25 million. And so I think if you framed it to people as all of the money that you make in your lifetime over $25 million is now taxed at 50% instead of 37%, it's an easier sell than saying all the money that you could tax over $500,000 or even over $1 million. I think Obama wanted to do like the Warren Buffett tax, which is like a 50% tax at $1 million. That would be $50 million lifetime. So I feel like that would be a much easier sell for people. Would be like, hey, after you've made $50 million, we're going to start taxing the rest at 50%. Is an easier sell for some reason than telling people that everything over $1 million taxed in 1 year at 50%.
What about a national sales tax that would completely replace a personal income tax?
Yeah, I don't know enough. It's a very good question, and I've never thought in the framework of that, and I don't know what it. I know other countries do it. They have like a VAT tax, right, and that's the primary source of income or tax revenue. So I know it's doable and conceptually taxes people that consume. So if you consume a lot more, you pay more in taxes. I'd imagine if it taxes rich people more, I'd be in favor of it.
Well, theoretically, if you make more money, you're going to spend more of it, and so you would be putting more money into that national sales tax by spending more money on boats and houses. But
the problem is you don't spend a proportionate amount of your money relative to lower income people, right? Like so, lower income people spend all of their money, and you're spending. Well, it might be significantly more. Maybe it's only X percent, 10%, 20, 50, whatever it is. And so I don't know if it's regressive in that nature, where people that have to spend money get taxed versus people that don't have to spend money can now afford not to spend money. I don't. Again, that's why I don't know enough about the math behind it to know if it would do what I would want it in my framework to do.
Okay, so wait a minute. So going back to your idea, would this be a gross income or would this be net income?
Yeah, it'd be gross.
It'd be gross.
Yeah.
So you can't cheat, basically.
Yeah. So I mean, I think some of the side benefits would be maybe you could reduce the different deductions and loopholes and whatnot that go into it every year. If you'd want to, you could just keep the same stuff and then just like your income for this year at the end of the year is adjusted for all that jazz and just goes towards your lifetime cap. But you could just make it simpler and be like, hey, all of your gross income goes towards this lifetime cap.
There's something so complicated, and I'm sure it's intentionally complicated about taxes and the tax code. And even if you were to fill out your own taxes by hand,
that'd be awful.
You definitely would make mistakes.
Yeah.
And so the idea that if you were to somehow simplify it in such a way where there were no deductions, but you paid a different rate. You didn't have to worry about deductions. You didn't have to worry about loopholes. I'm kind of tired of that word, by the way. I feel like it's been overused and it now has lost meaning because I think that's just what everybody says when they're campaigning for office is we're going to close the tax loopholes. So it's like, I don't even know what that means. What's a loop? Like, I mean, I understand the concept of a loophole, but you guys use it all the time. And so I feel like you're just saying that now as a buzzword.
Whoa. I'm not a politician. There's no you.
You might be at some point.
No, my wife wouldn't let me.
If we were to simplify, I mean, to me, that's almost even more important than drastically changing the tax code.
Well, taxes, they are. The government knows how much you're supposed to pay. They could just send you a bill. Like the only reason why we have all this shenanigans is because Intuit and the other tax filing lobbyists have just done a superb job of making sure that you need TurboTax. As a business, you submit your cost and your employee wages and all that stuff to the government. The government knows how much money you made. They do this in other countries. They just send you a number and be like, hey, this is the number we calculated for you. If you have any questions, feel free to go and do your tax return. But if not, we're just going to charge you this much. I think that's how they do it in like Sweden or something.
I disagree that it's solely because of outside influence of TurboTax and et cetera. I think that they the government wants as much money as possible. And I don't know why they're incentivized to do that, but for some reason they are. And by making it complicated, by making it hard to make deductions, and by making it hard to reduce your adjusted income, you just won't do it, or you won't be able to afford to be able to do it. And so they will make more money as a consequence of that. I mean, that's true, throughout any kind of business. That there are barriers to entry in terms of simplifying things to a point where I'm willing to take this simplified route towards something and pay more for it because I don't want to deal with it or I don't understand it. And so I think that obviously that's what's going on here with taxes.
I had this guy I was playing golf with once when I was talking to him, and as a lawyer, so he's got an education. So he went to, someone gave him a law degree and he went to college. And we were talking on the golf course about how his wife's a doctor, my wife's a doctor, and he was in favor of the Trump tax cut because he didn't want all of his money to be taxed at the higher rate. And I was like, well, it's a marginal tax rate, and it's only the dollars you earn over as a married couple, like $300,000 that get taxed at that. He's like, no, it's once you hit that new tax bracket, it's all of your money, and you have to stay below it. And so our goal is to figure out to maximize rate. And I was like, you are objectively not completely stupid, but you just said the stupidest thing you could possibly say. Like, that's just not how things work, right? And this is a person with like an education that just so fundamentally understands the basics.
The same thing happened to me. I was doing my taxes. I had a question about something pretty specific on my return. I called TurboTax them. I called them.
Oh, God.
Not for tax reasons, but some sort of weird problem that was going on with the program.
Sure.
And she said the same thing, that, well, it says here that you went over this particular amount of money, so that's the rate you're going to be taxed at. I'm like, no.
That's not how it works.
I debated in my mind, do I want to get into this conversation?
It's just not worth it at some point.
Yeah, it's not worth it because she was I didn't want to go into it.
Yeah, it's just basic marginal. I mean, marginal, people don't think on margins. It's not like a normal way of thinking, but it's the essence of the tax system. So you can't have an opinion on it if you don't understand how it works. It's just so frustrating. Ugh.
Yeah, and he's voting. He voted somebody into office because of a misunderstanding about that. I mean, that's crazy. God damn it.
Yeah,
now
so
you've pissed me off.
I know. My favorite tax is the estate tax because that to me is a readjustment of the income tax you should have been paying during your lifetime. And it so squarely affects the people that made an absolute fuck ton of money that when they reduced that was like I can't even, like I don't post on Facebook, but when I do, it's about the estate tax. Just unfathomably angry about that. To me, it's one of the most fundamentally fair taxes because it only taxes people as families that made over that have $25 million in wealth at the end of their lifetime. So, like, if you're like you and your spouse have $25 million, that's all tax free. So there's no income, there's no tax on the first $25 million. Again, marginal tax rates, and then everything over $25 million gets some kind of estate tax on it. But if you're leaving $25 million to your kids, like, they're fine. They don't need $25 million and then like 60, like, and then 80% instead of 70% of the next whatever. Like, they're going to be okay.
I think one of the reasons people push back on stuff like that, on the estate tax, and giving large amounts of their wealth away, or at least they perceive it as it being taken away, rather. I think it's not really about can I subsist on a scant $100 million as opposed to $500 million. I think the idea is that I have this thing and it's being taken away from me, whether it's money or water or food or a ball in the schoolyard. The fact that you have it and somebody has taken it away from you, there is a sense of injustice about that. And I think it's just human nature. You're never going to get around that. And because hundreds of millions of dollars has such intrinsic value, I just think that there is a severe emotional response to all of that money going away. You know, it's sort of like if you were to accidentally drop a bag of $100 million into a pit fire.
No, it's not.
You know?
It's not that at all. So first off, it's only a percentage of it, so you're not dropping all of it in. But
no. I just mean I mean psychologically.
Yeah,
no.
I
don't mean practically.
No. I know. But it's going somewhere. So right. Like, the money isn't just going, like, it's going to the government. The idea, so like, the government is a stand-in for like some kind of way of allocating resources from people that don't need them to people that need them. That's kind of how I view the government, and it's like, like a pure form would be the ideal setting. So like, the money's not going, you're not burning it, you're giving it to someone that needs it, ideally, in some way.
Yeah.
And then
I agree.
But
Yeah,
let me finish my rant. I got my rant. I'm in my rant.
All right.
I'm in my homeless little cubby right here, yelling into a microphone, and I'm feeling it. So it's just reframing it as an income tax. It's a lifetime income tax, right? It's the income tax you should have been paying during your lifetime because you made such a fuck ton of money. It's just an unfathomable amount of money. $25 million is $1 million a year without having to do any work forever. That's what 25 million in wealth is. And so like, it's just so much money. It's just, if you can't be happy on $1 million a year, I don't feel bad for you. You're a jackass.
So $25 million a year would be, for 50 years, that's $500,000 a year that you'd be making?
Yes.
Am I doing that right?
Yeah.
And that's, I mean, you could live pretty much anywhere on that amount of money and have a pretty damn good life. I mean, you could have a luxurious life for $500,000 a year. I mean, if you were smart about it. Yeah. I mean, if you were chartering jets everywhere, maybe not, but you could, I mean, if you were smart about your money, or even just kind of dumb about your money.
Yeah, no, you could be dumb. You could be chartering jets everywhere, right? You could be doing that, and you're making in 1 year what the median family in America makes in 10. So like you have plenty of like families, so households make about $55,000 a year in America. So that's a family of like 3.5 on average, makes 55. So if you can't live on 10 times that per year, I don't feel bad for you. You're a jackass if you're upset about that. Just letting you know. Again,
I think it's emotional. I don't think it's necessarily about somebody not realizing where the money is going or having an objectively calm demeanor about all this money.
I'm objectively calm.
No, but you're not giving away hundreds of millions of dollars to the government.
Yeah, that's true. Well, I mean, would it change your viewpoint at all or this theoretical person's, if it was just taxed each year instead of being a lump sum at the end? Because that's essentially how I think of it, as corrective income tax. Like, you should have been taxed more during each year, and so we messed up the calculations, and now you're paying at the end.
If the number was smaller that you were giving away every year, that's sort of what makes it a little bit more palatable, is that truly, even though it might be the same over the course of your lifetime, paying like the number of zeros after the amount of taxes that you pay per year is psychologically important and effective, versus if you were paying a huge amount at the end of your, like that is hard to stomach. I mean, even intellectually knowing that it's the same number, it's just amortized, right?
Yep.
So it's still hard to give away. I'm now going to just give away. And by the way, a lot of people view the government as a pit fire, that they're just throwing they don't understand that money goes to a lot of very important programs and very important utilities to make sure that we're safe and running and able to buy food. But people don't think of it that way. Emotionally speaking, when they have to give away $50 million of their hard-earned money, quote unquote.
No, they're not. They're dead. They're dead. The estate tax, you're dead. You're not giving away anything.
But the people that it go to, that is also very hard, because there are people who may or may not have been waiting on that money. And the idea that it's now been significantly reduced to a fraction of what the statement used to say, that is emotionally difficult, I think, for people to wrap their brains around. So I think that's
deal
the
with
biggest...
it, you rich fucks.
Oh God. Well, it was nice having those two followers. We're sorry to see you go.
Mom and Dad are going to hate me for this whole thing. They're going to be like, we didn't reach you in our conservative values. You don't understand hard work. You're giving all these people money away.
Psychology of a human is not adaptive. So it is the same whether you make $10. It's very hard to give away $7 of your $10 versus $700 million from your $1 billion. I don't think there's any difference psychologically in those two
Interesting.
things.
But then the other part of this is that it's such a micro fragment of the people in America. It's like 0.001%. It's like, so it's like, again, like my buddy worrying about it, that like doesn't understand marginal. He's going to be worrying about the estate tax. It's like, dude, if you're not going to hit the estate tax. You do the math. You guys are making $400,000 a year combined. If you work for 50 years, you're only going to make $20 million gross. You're not hitting the estate tax, and you're in the 1% of America, right? So like, if you don't have to worry about the estate tax, no one has to worry about the estate tax. I am sweating. I'm like, my heart's jumping up and down. It's just because the estate tax, dude. I brought it upon myself too. We didn't have to go there. I just had to go there because that's like an actual, but that's like the only current version of this progressive income tax that exists, which is like, when you think about it, it's a progressive income tax on these like super wealthy people. that basically fits the mold of what I'm talking about. And I think that's why I like it so much and so passionate about it.
So join us next week on Chris's side podcast called Tax Policy Gives Me the Meat Sweat.